There are three methods of creating charge out. Charge out is a process where at the end of the year, you know those expenditures which are floating in your balance sheet are now right for charge out to your profit and loss account. Why deferred expenditure are kept floating is because the government do not allow these expenses to be charged out in your current year. In construction projects, development expenditure are floated in your balance sheet and can only be charged out based on the architect's certification. The architect will certify the percentage of completion, and based on that percentage rate, contractors or property developers can then charge out according to the percentage certified by the architect. In the first method, you need to create one account called development cost account, because we are going to transfer 61,750 from the deferred expenditure account in total to development cost account, which is also a single account. Some auditing firm will only give you one figure, which is the development cost, and they will not break down your expenditure. And that's the reason why you need to just create one account. Make sure don't click charge out, because it's not a charge out. When you put charge out, then you'll be tracked in the posting where you keep on going to the deferred expenditure account. It will not be reflected in your P&L. So since this is not a charge out, okay, in the system point of view, so let's say during the year end, the auditor give me the figures. I know it's going to transfer out of KB phase, and now I put this year end. You can click this. This is just the reference default. Per audit adjustment. So it's important not to enter this, because it will force it will be posted to your deferred expenditure. But anyway, if you mark this as a charge out, they will force you to enter. So it's very important that you do not mark the account for deferred expenditure. 61, say I want to transfer 60,000. Now the next account would be foundation. Maybe here I'm going to, you can see I can't use this. I have to use this. That's how it goes. Now let's review the balance sheet and find out the exact figure for the deferred expenditure in balance sheet. 61750. Okay. We can come back here. You can see the total here. that shows it doesn't balance, because 61 minus 61 become 123. So deferred expenditure, I'm going to offset this. When I click offset, add a minus. Minus means credit. Now a minus and a plus becomes 0, which means total of debit and total of credit now tally. And when the total is 0, it will allow me to post. Otherwise, it will prompt me and force me to make adjustment accordingly. So I'm going to post this. Now let's see what happens to the balance sheet after I do the adjustment. Now the adjustment says I transfer the entire amount of 61750 out of this account and into the P&L. So you can see here becomes 0. Let's take a look at the P&L account. See the development cost, which is 7120, which I created earlier on. It goes to this. So you can see there is no breakdown of this charge out. Some company practices this method.